guys, how are you doing today? Okay, this is another tutorial, right? I want to teach you a simple strategy, right, based on what I've actually been talking about before, right, in rules of spotting another block and how to really trade in line with the market. I mean, institutional order flow, market structure, and trading in the best way that the market maker or the liquidity providers would have actually followed or traded. All right, so this is why I have actually designed this particular simple way for you to look at the market and for you to really be profitable in the market, because my aim is that as many people as possible that could not really afford my mentorship, at least you have other free informations that you can actually trade with, right? So that at least you can trade for yourself and also be profitable. Then by then, if you like, then you can join the mentorship. All right, so this particular video is inspired through the trade, one of the trade I took this week. It was actually sent to my channel, right? So I'm going to explain that trade in line with what I really want to talk about. So the title of this video should be how to trade the equal low. As you can see, based on the drawing that I've actually marked for you right in here, while we have an equal low here, if you actually maybe ignore the block I marked here and every information that was actually put here, but look at the fact that we have an equal low here. Now, how can you trade with this equal low, and how can you follow suit when you see this equal low? Basically, I know I've actually taught equal low before, and we use that basically for liquidity. But I mean, just for example, maybe when market come, give us a low, right, went up, give us another low, then maybe begins to really trade and things like that, begins to really trade like that. Then maybe in some other time, market can then come back to take out that particular equal low, then market will reverse. Then basically, this is what many people have actually thought concerning the equal low and things like that. But I want us to look at it from another perspective. What about the fact that if market break through it and is not really reversing, how do you really want to trade? How do you want to continue trading? How do you want to pick the next direction of the market? Basically, we are expecting to take a buy trade from here, or maybe it's actually going to be an equal high. It's supposed to be maybe it's a buy trade, a sell trade. So equal high based on liquidity trading concept. Equal high is supposed to give us a selling trade anytime we see that. Then equal low also to give us a buying trade anytime we see that. But in this particular perspective, now we want to use equal highs and equal lows in another dimension. How do we then trade it? Now, looking at this particular trade here, let me try to delete this. Looking at this particular trade here, now we have one low, we have another low. Then after market has started to retrace back, you can see when market retraces back, many people would have actually be expecting that, okay, if liquidity come back here, if markets really retrace back to this area and took out this area, then we should really change direction and begins to follow in a buy model, buy direction. But based on my findings in the market, that actually works. I trade that also. I use that as a liquidity. But at the same time, I can also expect to trade in the next direction, in the opposite direction, which is actually going to be a sell. So why and how will I really follow suit in this particular model or in this particular illustrations? And as you can see, when market retraces back into this particular equal low and form an equal low, then the retracement up, just like many people would have actually been buying. That's the reason why I put a break of market structure here. And as you can see, market retraced deep into this particular block. In most cases, anytime I see something like this, when market actually retraces deep into this particular OB, that's supposed to be a buy or other block for us to continue to go bullish. Most of the time, if price now retraces back and retracement hit another OB here, now this particular OB that I've actually marked, I titled that pseudo OB, pseudo order block. Now I've actually thought concerning this particular 4 rules of order block. Now if you're a new viewer, I will want you to really see the link that will be suggested for you here. Then you can follow it and trade and study it so that you can understand what I'm really talking about. So the retracement that this now happened, many people would have actually been buying. Now look at what happened. All right, price now reject on a pseudo zone. A pseudo block is actually another block too, but it doesn't fulfill all the rules of the other block I'm looking out for. That is why I name it a pseudo, right? Because it doesn't fulfill all my rules. So it looks like another block for me, to me, but it is not the main order block I'm looking out for. So when this particular retracement reject on this OB, now we can see that it formed another OB on that particular rejection zone. So this particular OB that formed, right, it fulfills all the rules that we have here: accumulate or took out liquidity if that one is present, reject on a pseudo, which is really what we have here, then engulfed or have an FVG in it, right, which is actually what we have here, a fair value gap between this line. Then number 4, it has an impulsive move that breaks structure. As you can see, this impulsive move now ended up taking out this equal low that we have. Now sometimes you might not really have a perfect equal low. It might actually be maybe something like this, but we actually want to see it retrace deep into this particular OB or this particular zone before we can actually call this maybe an equal low, an equal high, or an equal high, as the case may be. Now let me just invert it for you to see. It might actually look like this in terms of maybe for us to buy, or like this for us to sell. So in this particular case, when markets now break through this particular zone with an impulsive move, either an equal low or basically price gave us something like this, it doesn't really form an equal low completely, just like what you can see here, then we want price to retrace back into that particular OB or we're expecting, then for us to continue to trade. Now I will suggest that your target should be the last swing low that was formed before the retracement into our or point of interest or our bias RZ. So your target can be in this particular zone, or you can target 1 to 5 risk reward ratio, 1 to 3 risk reward ratio, as the case may be, based on your own preference, right? And just like what I said, this is actually one of the trade that was taken this week. I'm going to show you that. Then I'm also going to show you some other sample that I really did not really mark out. Now this is my channel. I already posted this. As you can see, this was sent to my special student, right? Those people that are already receiving my signals already, right? As you can see, price retrace back. Now what did I mean by receiving my signal? They are in the special class. They paid $2,500 for me to teach them, at the same time share my trade with them. That's the reason why they have that opportunity. So I'm going to explain this trade. Now this was displayed on a 15 minutes time frame, but I'm going to show it to you on a lower time frame, and for us to also see other examples based on what I've actually explained, right? So you have to see this particular video as many times as possible for you to really grasp everything I'm actually going to talk about. So look at this diagram. You can screenshot it, save it, so that you can really study it over and over again. Okay, let's move on to the next chart. Now just keep this particular chart to yourself. So we'll move to USD card, because that trade was USD card. I'm going to show you different examples of the trade that was actually taken on this particular one, right? I took this particular one, then this one was a loss. It was actually not a perfect trade. So this particular trade was taken based on that concept, but I'm coming back to that. I want to show you this one first, right? This particular one, this is actually the one I want to show you, and that trade is in this area, right? I'm going to show you on 8 minutes time frame, on an 8 minutes time frame. Right, let me quickly go to 8 minutes, right, and show you to you based on what I've actually explained. Now you can see, just like an equal low was formed here, as you can see, equal low, then retracement that we have here, although took out liquidity, as you can actually have it here, then at the same time it's rejecting on a pseudo, just like what we can see. Now let me try to clear everything that I have on this chart so that I can actually, as we have it here, now I'm going to mark this as our equal low, right? This is now going to be our equal low, as you can see that there, or there is not a perfect equal low, just like what you can see there, but just like the perfect retracement, that just like what I told you, it rejects deep into this particular block here. Now basically, based on this, now we have our pseudo block here, because our bias RZ was rejecting on that pseudo. I've already explained what pseudo means to you, right? So we have another block here, which is actually the one that we are actually interested in, but basically that particular block, it's not a perfect impulsive move, or at least it actually ended up breaking this particular structure that I can actually tag as my external structure. So because of this, right, let me just try to cancel, just to have a replay here. So our pending order, right, was here, right? Then easily we have a 1 to 10 risk reward ratio that was actually forming here. So let me just put it a 1 to 10 risk reward ratio. Now, just like what I used to say, now you can actually target we have another equal low here. Can you see that? You can target that zone, which is actually going to give you 1 to 10, 1 to 5 risk reward ratio, or at the same time you can target 1 to 10. But I just want you to take profit on time, because it is only the profit that you took that belongs to you, right? If you leave money on the table, then that's actually going to be the end of the game if price actually came back to take you out. So you can see that particular zone was triggered in, then our 1 to 5 was easily what taken in. Now for my student, right, or some other people that have actually thought my teaching style, right, this could have actually become our internal structure, then at the same time our external structure. So basically, it's not a different things entirely, but it's just another additional information that we have on this particular view. As you can see, right, this equal low, it ended up the retracement, right, hit this particular zone, then at the same time it has an impulsive move, price retrace back into it, then this is really what we have here, right? So it break market structure, which is really very, very important for us to see, right? So let's see another example. Let's just see another example. So I will go to 5 minutes time frame. Let me just cut this short here because I have another example of one of the trade that was actually taken here. Now we have another one here, something like an equal high formed here, this equal high. Now maybe I've actually explained to you in that particular drawing that the block you are looking out for as your buyers, the one that must eventually come back to take out that particular equal high or equal low, must have an impulsive move that will break structure, and at the same time it must reject on a pseudo. So based on what we have here, look at this particular block here. What do we have? Right, is rejecting. This is a pseudo, right? That impulsive move. Let me see for 4 minutes time frame. Right, so this particular impulsive move, right, from here, though it's not really clear. If I really want to do that, I will choose the 3 minutes time frame, right? The 3 minutes time frame is actually so clear. Is it 3 minutes time frame I used just now? Yeah, in this particular zone, but price did not really come there. As you can see, price did not really come to that particular zone, but it actually makes sense. Why? Because it follows everything we are looking out for. Assuming price really came back to this zone, it will have actually triggered us in. But anyway, on the 4 minute time frame, now, if you're actually looking at this particular block, because that actually also makes sense to us, this particular block for us here, right, which was actually how I took it anyway. My stop loss was actually put here, right? That was about 2 pip stop loss, 2.6 pip stop loss, and our target is actually this previous high, which gave us about 1 to 7 risk reward ratio. So look at what was done, right? So 3 minutes time frame was the one that gave us the pseudo, because it wasn't present on the 4 minutes time frame, but basically confirmed with the 4 minutes time frame for me to take that trade, and that was really what happened here. So lastly, I'm going to show you another trade that was taken, that was on Friday, which was a day before yesterday, right? And I'm actually going to show you that how this really worked out. Now on 5 minutes time frame, that was actually what it was taking. Let me show you the picture again, right? So you can see this picture, equal low, reject on a pseudo, came back with an impulsive move, then we want price to really trace back. Now you have to study this video over and over again, right? Understand what I'm really trying to explain to you, then you can really grab it, and at the same time practice it, mark as many charts as possible, practice on your demo account before you actually join the live gang. Now, okay, let me quickly show you that what I'm talking about in here. Now I can see basically the replay mode, right? Let me start from here. The replay mode here. Now based on the chart I actually drew earlier, right, I can see that market was bullish. It broke market structure here, and normally now this particular zone also to be where we should buy this particular pair from, right? It's supposed to be where we're supposed to buy this particular pair from. But look at it, based on what we have here, price actually retraces deep into this particular zone, forming an equal high. Now let me put a line here, forming an equal high, right? Forming an equal high. Now for those of you that might actually say that, oh, it's actually an inside, I've actually proved to you that this particular trade was taken, and at the same time the wave chart was marked even before this really happened. Now when price really retraces back into this particular zone, then we have price, right, now moving up, many people would have actually be a buyer here, as many people that are trading this particular concept would have actually maybe opened their buy here, put their stop loss here, as the case may be. Now look at what happened. This particular block now serve as a rejection zone for it, but we are not going to take a sell immediately from that. Now we want this equal low to be taken, and price action should give us an impulsive move then before we can be looking for a selling opportunity. Now let's go on to see. Now we can see price came back and we were stopped out in that particular buy trade, although that particular buy trade still gave us 1-to-1 or 0.15 risk reward ratio, but that is not so satisfactory. All right, so let's see what happened afterward. Right, then you can see price gave us this impulsive move that eventually breaks structure. Not only that, let me delete this particular one here. So price, we have a pseudo, as you can see here, a pseudo, right? Then this particular impulsive move. Now let's see 4 minutes time frame if we can actually get a clear OB. Now it's not there, 6 minutes time frame. Although I can take it from there, but I love seeing a clear zone before I'm actually going to trade. Let's see 3 minutes time frame just for us to have a clear zone from there. Right, this particular one is still very clear for us, so I'm going to mark this as my bias. So I want price to come back into this particular zone for me to actually be a seller in this particular trade. And no doubt I'm actually going to target either this low, and at the same time, as I can see that we still have some kind of gap in around this particular area, I can target 1 to 10 into all those zones. So our entry would be this particular zone, stop loss will be here. All right, so let's see what happened. Let's see what happened. All right, so that trade already triggered us in, right? It has already tapped into our zone, so we want to target 1 to 5 as our first target, then 1 to 10 as our other target. All right, 1 to 10 as our target. So let me just put it at that. So don't forget, we have an equal low, price retrace back, form an equal low, then the retracement that was actually going up that many people would have been buying, right, would have actually be the one that's going to reject on a pseudo, right, which is actually another order block. So price came back with an impulsive move that took out this equal low. So money traders would have actually been looking for a buy around this particular zone, took out equal lows, then maybe probably they will really be buying from here. But this is actually a trade that I want to sell from. So let's play this out and see what this will give us at the end of the day. Right, as you can see, the trade is going down. It's going down. So we're targeting our 1 to 10 risk reward ratio. Then our target was met, and that is how you can actually follow in this particular pattern. It's just as simple as that. You're just looking for the best edge for you to incorporate into your trading, then follow it, then you can see how best this particular opportunity can actually be presented to you. Now I will want you to practice this as many times as possible. Now you can just imagine you just going for 1 to 5 risk reward ratio, and let's even say that we have a 50% win rate. All right, 50% win rate, that shows out of 10 trades you are going to lose 5, you are going to win 5. Now calculate that. Just going for 1 to 5, that is 5 times 5 will be equals to what? 25. Then you lose 5 trades, which is actually going to be your net profit should be your net profit should be at the end of the week, at the end of the month, or whatever period that you actually traded that 10 trades should be 20% at the end of the day. That's if you are risking 1%. If you are risking 0.25, just as I'm doing, then that's supposed to be about 4% or so. 4% or 5% or thereabout. So this is how beautiful you can actually incorporate this into your trading style, and you are going to win all the same. Now this is to say, let's say for example, price actually took you out based on the fact that this particular zone is supposed to be your buy trade, and price took you out, right? No, instead of you to now be looking for another buy trade and things like that, and you're just forcing the trade, now you can just look at it. If it meets this particular rule, then you just change your bias immediately from buy to sell. And as the case is also can be repeated when you're actually buying at the same time. Do you understand what I'm trying to say? So you are expecting to buy here and you already took a buy. At the end of the day, price eventually took you out and formed this particular pattern, then take a sell trade. And that is how you can actually follow the market, by you edging your trade without losing anything at the end of the day. All right, so if you have gained value in this particular video and you are a new viewer, please kindly subscribe to this YouTube channel. Please help me to subscribe to this YouTube channel and drop a comment. Ask questions, and anything that you are not clear with, just ask questions. And at the same time, please like this video. Make a comment, and subscribe to this YouTube channel. And at the same time, we have a Telegram page, right? You can also follow us on Instagram and also all our social media platforms. Right, and as many of you that are interested in joining our mentorship, the information is there on our website. You can check the website and get started from there. And at the same time, right, you can send a DM to me on Telegram or on Instagram. I will be very happy to actually answer your questions and to receive you into the mentorship class. All right, guys, thank you. I will see you in the next section.